What is up YouTube? My name is Sanjeev and today I'm going to be changing your life. If you guys listen correctly to each and every single step in this video, I can guarantee to you you will become successful and financially independent through the Forex trading market. So to begin this video, I'm going to be showcasing the power of compound interest. Forex is a marathon, not a sprint. Keep that on your head when you trade. My goal as a trader is to hit 10% a day. Don't let that 10% scare you though. I originally started only with 1% a day, and that's a huge rate of return at the end of the year with 365% on top of what you originally deposited, which is crazy. So keep that in mind when you're trading. It's a slow and steady race, as I've stated before, and I'm repeating it again because of how important it is to remember this. Everything that's good takes time, and this is heavily implied in Forex trading. My goal as a trader is to hit 10% a day, as I've stated earlier before. So let's go to my computer, check out my spreadsheet, and see how well this 10% can actually bring you in returns at the end of a year. Okay, so we begin this account balance originally with $10 on January 1st, 2018. After 30 days, we should be hitting an account balance of $158 if we hit our 10% goal every single day. Additionally, after another 30 days of trading, we're now sitting at an account balance of $2,500. So let's take that $2,500, put it here, and begin our third month of trading, 10% every single day. That $2,500 now after 30 days additionally again is now sitting at around $40,000. Now for the fourth month, that $40,000 should be well over $500,000. What we can see here is that price after 30 days is now at $10 million, and after additional 30 days from those $10 million that we have earned, it is now at nearly $160 million. Keep in mind, 6 months ago, we started an account with only $10. This shows you the power of compound interest and what doing a daily percentile goal can bring to you in the long term for Forex trading. What separates a winning trader and those who lose is a trading plan and a trading journal to record everything that happens, from their entry points to the exits to the wins and to their losses. This is what separates winners and losers, and it is key for your Forex journey because you can find what works for you and continuously do it every single day. So now you're wondering, how do we capture that 10% a day? Well, to make it simple, it's all up to you. We as humans are all different and unique in our own ways, which means we have different risk tolerances and preferences for investing. For example, I want to make 10% a day, so I'll be risking either 5% or 10% depending on the trade itself. There is no strategy, indicator, or plan out there that'll be perfect from the get-go. Over the time of trial and error, you can make any strategy and plan that you create for yourself work for you. Keep that in your head and keep going at it. If you don't have time to stare at charts all day, or possibly you have a full-time job, swing trading may be for you. If you're patient and don't mind holding a position for a couple of days or possibly weeks, you're a swing trader. It may be because lower time frame charts are too much for you and there's a lot of volatility in them, so you prefer watching your trades play out over time. Swing traders usually look at the monthly for momentum as well as the weekly, and then dial down into the 4-hour and 1-hour for entry points. Okay, so after labeling all our strong support and resistances, essentially the key levels that we want to be paying close attention to, we are now dialing in closer to the weekly, daily, 4-hour and 1-hour charts for entries, of course, like I said earlier. So what I saw here was that price broke this original support, and so I definitely see a retest either to this point or to right here. If it does come right here, I'm going to be selling, because if I sell, we definitely can tell that price, if price continues to go up here, that means we broke this resistance and our trade was faulty. So we can learn from everything. But right now what I see is that price has to come back to this key level over here because we are currently in strong bearish or downwards momentum. So let's go ahead, play this market price and see where we are currently going. Want to wait. As you can see here, I labeled the key points, and so I'm waiting for this to come and happen. Let's speed forward a bit. Let's speed it up. Okay, I want another touch, one more touch in that point. Okay, so I would sell right here. Close it. Let's go. And so right here we have it perfectly set up so that if price goes to touch this wick, we will 100% take our profits right here, which is what we originally wanted to do. So we sold, price is now in bearish momentum. We continuously go. We have a retouch on this now resistance, because this support or this key level was originally a support and now it is a resistance. So forwarding on, we can see that price went and hit our key level and the point that we made earlier and filled the wick that was originally left by the market. So right after we hit our price level and hit our take profit, price essentially had a huge rejection and went up because it was a key level and now a strong support. All we did was look where price was heading, label down the key points, and enter from there. If you're a day trader, you master certain setups that are profitable for you. This may be when a certain technical analysis appears in the market, or when you see a possible reversal trade, etc. I could go on and on and on about the certain setups and strategies one could use when they're day trading. Either way, you're patient and disciplined enough to wait for what works for you. Day traders usually look at the 4 hour, 1 hour, and then 15-minute for entries. But at the end of the day, do what works for you. This is an example of me day trading. Okay, so of course what we do is we label down the strong support and resistance points. And after labeling all those points, we dial right in. What I can see right here is that we are in a strong bullish momentum because price is going up right now. So what I want to do is I want to dial into the 15-minute make an entry. What I want to do is essentially what I visualize in my head when I'm looking at this chart. Essentially, you guys should definitely do that too when you're about to take your entries and when you're looking at price. But what I do is I visualize what the next candles are going to do. So from here, I see that we tried to make a bullish approach to this new resistance, but we couldn't hit it. And there's a lot of wicks here, so price is probably going to pull down a bit more, gain more liquidity because people want to buy at better pricing, and then shoot this price up and go fill this wick here. So we're getting that pull that we wanted. I'm going to buy right here and go to our 15-minute. Let's see what price is doing. Gonna buy again. Only profiting, so I would put that's one hit. Let's go for the other one right now. See, that's a strong resistance point. Then that's two right there. We're out, but we haven't hit that point I was talking about earlier, so maybe put in another buy right there. Let's keep going. We're gonna fill this wick for sure. Will we keep going? And oh, we almost did. Can we complete that final push? See how the 15-minute looks. Yeah, that was a strong resistance. Oh, we will see where price goes from now. And if we kept moving forward, we could see that price eventually went and hit our take profit. But that's how I would day trade, just simple price action. Saw that we were going to pull down and push up, and we did eventually go and fill that wick that I was originally talking about. Support and resistance did play a huge factor into this. What I saw that was price was consolidating a lot here. It looked kind of messy, so we wouldn't enter that. But right when I dialed down, we can see the entries all here that I took. All buys just closed, simple. And from that $10,000 account, we were up 84% literally from 3 trades. But of course, we're risking a lot, but this is a simulation, and this is how I would trade if I was day trading. Lastly, if you're a scalper like me, you like to be in the market for short periods of time. You only care about what happens when you're supposed to be trading and nothing besides that. Like I said before, follow your trading plan. You enjoy taking your profits fast and being in the market for short durations. Scalpers usually look at the 1 hour for momentum, and then the 15 or 5 minute and possibly 1 minute for entries. Okay, so from a scalping perspective, essentially what I do is, right now it is 14 GMT. Market for New York opens at 15 GMT, or for example, if you're Canadian, it opens at 5 AM Pacific Standard Time. So what we want to do is, because I am from Vancouver, I have to wake up early for this, but what I want to do is label out the support and resistances as we always do. And what we see right here is that price broke past a support, and we may be going for this wick fill right here. We are 1 hour before New York opens and price usually sets up. So what I would do is, I see that this is a wick right here, I would buy. There was a pull down, I would take that buy. Let's go forth. Let's go to real time. Let's speed this up. And we see, we wait. Let's dial down to the 1 minute. Let's see what's happening. So we're having lower lows. Price may come back here and then go back up. We'll see what happens. So we're now in profits. I would move my take profit to around break even once we hit around 5 pips. So right around this area, I would move to break even. And still in the 14. We just hit that. Okay. We hit our take profit, first position. Now we're gonna wait for New York to open and enter for a second. So let's wait for that to happen. Let's forward. We'll look at the 1 hour, see when the next candle is gonna be made. Price is here. I would stop. I would actually enter because we're gonna go fill that wick. We'll see what happens. Yeah, these wicks kind of are iffy, but we're gonna go for it. We'll keep going. We'll see where price goes. Little bit of a pullback. Do believe we're gonna fill this wick and keep going up. We're just gonna wait and see what happens. Okay, people are starting to buy into the market. There's strong bullish momentum because we can see that right now. Let's speed it up a bit. And we hit our take profit. Done. Simple. Scalping is really simple. You see my positions here in the 5 minute. How everything worked out. Short period of time. I was only in the market for an hour. 2 hours actually. 1 hour before New York open and when New York open happened, because there's huge movement when markets like these open. And we're out. Simple. And we are up 18% from 2 positions from our $10,000 account. That is good, and this is how I scalp. Each of these trading styles have their pros and cons. You just need to find what works for you. All time frames mentioned were opinions on what previously has worked for me. I am a scalper because I choose to be. I enjoy the freedom and flexibility of scalping, and that's why I do it. Lastly, make sure you have a trading plan. Just like life, you need to set goals to achieve, or else you're going to get completely stomped on and blow numerous accounts. If something works for you, you'll be able to go back to your trading plan and see what it was, and you can be able to repeat it. Do this with every single trade, and I guarantee you will become successful.